Hi, welcome back to KR Stock Portfolio. Just wanted to post a quick video for any viewers based in the UK and just to highlight the impact of the current relative strength of GBP sterling against the US dollar. So for those based in the UK who are investing in US stock markets, obviously you are depositing GBP sterling and buying stocks based in the United States denominated in US dollars. Now, currently the pound is appreciating quite rapidly against the dollar. So just to give my trading position as an example, I started trading back in sort of early August 2020. So I'm just looking at the chart, pound against the dollar. Back in August 2020, £1 was worth about $1.31. You can see now over the last month, well, the pound has appreciated from 1.36 to about 1.39. So that's pretty significant. If we just hop on over to trading 212, so to give three examples of some decent investments I've made in terms of size, just starting with AT&T. So if we look at AT&T, at the moment my return is just under 4% down. But if we have a look at that, actually in terms of the stock performance, if we look at the gain loss, you can see the gain loss is around 2.8%. And the FX impact is actually negative 6.6. So what you'll be seeing if you invested at the back end of 2020, coming into 2021, you're going to see a negative impact on that appreciation between the pound and the dollar. So that's completely negating any benefit I've got in stock price movement. If we look at another example, AvalonBay Communities. This stock was one of the first stocks I bought in trading 212. If we just look at the history, so I bought this stock in back end of September, then I bought some more in October. But if we just look at AvalonBay, so overall I'm about 12% up on the investment, but you can see 20% improvement in the stock itself, but there's an 8.6% loss on FX. So I'm a full £44 down. Final example, Cisco Systems. On this stock, I'm overall 13.5% up. However, the stock is up 20 to 21%, and I'm currently down 7% on the FX impact. So it's really worth keeping an eye on this chart. I mean, the point is, if we look at the maximum chart, going back all the way to 2008, financial crash, the Lehman Brothers crash, the pound always traded around 2. Well, it got to around 2. So that was great for British tourists going across the US. Got a lot of dollars for the pound. And following that crash, it's really been weak. The pound's been weak. Particularly coming into 2016, all of the Brexit stuff going on. And we can see now that the pound most recently is starting to appreciate back up to around 1.4. So really, a cheap pound is good for investments, whereas a strong pound is bad. But I just wanted to highlight, I hope it's of interest. It just is worth bearing in mind when you're investing in the American stock market. Any strength in the pound is going to negate any gains you're making on stock price. So that's important when you're making your investments. Keep that in mind. And it'll be interesting to see where that goes. I hope you found that interesting. If you've got any questions, I'd love to hear from you. In the meantime, I'll speak to you again soon.